Oh boy, if you're a SoFi shareholder, Jim Cramer said he's a buyer of SoFi. He's not a seller of SoFi. A lot of people think every single time Jim Cramer talks about a stock that he likes, it's always going to tank through the floor. He talked about this on September 21st. The stock was $8. Now the stock is $7.50. So it's not looking good for Jim Cramer once again. He is generally a meme where if a stock is dropping a lot, he thinks it's a trash company. If a stock is rising a lot, he thinks it's the best company in the world and everyone should be a buyer, especially all his listeners on the lightning round of Mad Money. I've learned over the years to literally put zero stock into what Jim Cramer says about any stock, no matter what, absolutely no exceptions. I listen to everyone's thoughts and ideas, I'll take them into account, but they will definitely not be the reason I buy a stock, they'll not be the reason I sell a stock, they'll not be the reason I short a stock, etc. So we're going to get into what Jim Cramer said, but first, if you're new here, I'm Austin, I'm a co-owner at cloudmusicsuite.com, I'm a stock market investor, and most importantly for this video, I'm a SoFi shareholder. I've been a SoFi shareholder since before they went through their SPAC merger. But nonetheless, SoFi shareholder, have been for quite a while, have a lot of shares in my bag. It's been a really fun story to watch over the last little while. Real quick, the channel's somewhere around the 2,000 subscriber mark. If you're not subscribed already, click that subscribe button as I thank you for doing that. Here's a picture of my beautiful dog. Her name is Penny. Okay, let's talk about it. So CNBC, Mad Money, Jim Cramer was asked about, someone said, should I sell SoFi stock? It's seen about a 10% drop. Is it time for me to sell into this weakness? He basically said, I wouldn't be selling right now. I'm a buyer of SoFi, but there's one thing he did say that I actually liked, believe it or not. So he said that a lot of people are worried about the student loan situation with SoFi, whether or not the student loan wave is going to come through in a massive way for SoFi or not. And his main point here was he's not really worried about that because SoFi is not a student loan company. Okay, prior to 2020, around 2019, 2018, SoFi was getting more than 50% of their total revenue from student loan refinances. That is not the case anymore. It's a very, very small fraction of their revenue, which is extremely impressive. To go from a company that has 50% of your revenue in student loans, and then student loans get canceled basically for like 3 years straight, and for them to still be putting up record revenues every single quarter in and quarter out. And we're not talking about a 5% increase of revenue on a year-over-year basis. We're talking about 30%, 40% revenue growth on a year-over-year basis. Every single metric across the board has been head and shoulders above the prior year and above the prior quarter. This has been one of the most consistent growth companies over the last 3 years, and I don't think that's going to change over the next 7 to 10 years, which is how long I expect to be a shareholder at minimum. So the good thing about this is, yes, there might be some worries about student loans. How much of that student loan refinance is SoFi really going to get? I think the answer to that is a lot. But even if it doesn't play out in their favor and they get a very small bump to their revenue from the student loan refinances, they've proven to the markets that they really don't need these student loan refinances in order to keep on growing their business. I think it would be awesome for them to get those student loans so they can then port those people over to financial services like their bank products, their investing products, other loan products, insurance, etc. But Jim Cramer's takeaway of, yeah, people are worried about student loans, but they really shouldn't be with SoFi because they're really not a student loan company anymore. That is so true. It's been really, really impressive to see SoFi be able to flip even through these crazy economic times from that student loan refinance company. They get 50% of their revenue taken off the table completely. They switch that over to the personal loans, home loans, invest products, banking. They acquired a bank to become an FDIC insured bank. Not to mention the technology platform, which is more of the B2B side, the business to business side, where they've got Galileo and Technesis trying to be the back end of banking. As they've said, the AWS of the banking sector. As long as SoFi keeps their revenue growth rates somewhere between 20 and 40%, which by the way, that is massive. That is insanely high revenue growth. But I do think they're going to keep it for many, many, many quarters and many years to go in the future. They're going to keep on letting more of that money trickle to the bottom line. And I think sooner rather than later, they're going to switch to GAAP profits on the EPS numbers. GAAP means generally accepted accounting principles. That's like the holy grail of profits. It takes out one-time expenses and one-time profits. So I see over the next 2 to 4 quarters, us actually getting to EPS positive, and then shortly after that, getting the income from operations positive. I'm super excited for SoFi to flip to those profit numbers because oftentimes we see companies get a lot of respect from a much wider investor base once they're up to EPS positive and they've actually got net income rather than net losses. Net income de-risks a company in a massive, massive way, and income from operations de-risks de-risks a company in an even bigger way. So as we see those two things play out, and they keep up the revenue growth that they've got going on for them, and they keep on growing those deposits by $2 billion each quarter, which is absolutely ridiculous. They're just going to keep on climbing that list of biggest banks in the United States, and they're going to really prove themselves as a major player in the banking sector. And like I said, they've got that technology platform in their back pocket. As long as they can keep on working on those larger, more durable customers, we're going to see those revenue growth rates increase in a major way from the technology side of the business, and then getting those expenses under control so they can get the contributable profit way up from the tech platform. I made a video about a month ago about how I was frustrated that the contributable profit dropped by 20% on the technology side. As long as they can right the ship on the technology side, keep that 20 to 40% growth, and then over the next few quarters flip to EPS profits, I think the investors of SoFi are going to have a very, very, very good time. This is your daily reminder that stocks follow earnings over the long term. As SoFi continues to be in a better position as it relates to their net income and their income from operations, the stock price is going to go up slowly over time. I'm not saying they're one-to-one perfectly correlated, but if we look on a very long-term basis, like a 5-year to a 10-year outlook, stocks do follow earnings over the long term. There can be macroeconomic things that depress a stock in the short term. There can be fear, there can be excitement. We could be in a bubble scenario where a stock goes absolutely crazy. But don't forget, over the long term, stocks follow earnings. I want to know what you're doing with SoFi out there. Do you agree with Jim Cramer? Are you a buyer right now? Are you a seller? Are you staying on the sidelines? Do you think SoFi is an awesome company, trash company, etc.? I want to hear your thoughts about it. Let me know in the comments. I appreciate you being here in a major way. Have a great day.